Has this ever happened to you where you've got the cleanest breakout, you enter your position quite confidently, and the next thing you know, the price goes in the complete opposite direction, and you're left scratching your head trying to figure out what went wrong? In this video, I'm going to be showing you how to avoid false breakouts trading binary options. But before we get straight into the video, for those of you that are interested in trading stocks, I've launched probably the best stock signals room in the game. I provide 2 signals per day, 10 signals per week, 40 signals per month, and you can join for absolutely free. I send out 1 signal during London session and 1 during New York session. The stock signals are exclusively tailored for pocket option only. To join, all you need to do is register a new pocket option account using my referral link in the description below. Deposit a minimum of $50 due to the size of the lots, and you can use the code 50START to get an additional 50% bonus. Once you've completed these steps, you'll need to send screenshots of proof directly to me at FX Hypes on Telegram. Once approved, I will permanently add you to the VIP stock signals room. To remain in the signals room, all you need to do is consistently trade with your new registered pocket option account. So what are you waiting for? Let's start trading together. Let's start making money together. I'm looking forward to seeing you in the signals room. So what is a breakout? A breakout is essentially a break of a support or resistance level. That's pretty much the definition. Here we have a great example of a clean breakout. We've got our support and resistance levels, and we've got multiple key rejections of both of those levels. In this case, the price breaks through this resistance level, making this a great buying opportunity. So you're probably wondering, how do you find good breakout setups? And the answer is breakout patterns. I'm sure you guys have seen and heard of these before, and I'd highly recommend going to study and memorize a few of these breakout patterns to help you identify identical breakout setups on your charts. Now, it's not necessary for you to know the names of these patterns, but rather the setup of the pattern itself. It's also very important for you guys to note that the price will rarely mimic the exact illustration of these patterns. Like in this example here, we've got a wedge pattern, and I can tell you right now, it does not look like the illustration, but it's still classified as a wedge pattern. Your breakout pattern setup does not have to be perfect. It just has to look more or less the same as the illustration, and this applies for every single breakout pattern. At the end of the day, all these breakout patterns have something in common. They all consist of support and resistance levels with multiple key rejections. Okay, so now I'm going to show you guys 2 methods to avoid false breakouts. Just keep in mind you can use any one of these 2 confirmations before opening a trade. So before we get into the first method, we need to identify what breakout pattern this is. And as you can see, this is clearly a pennant breakout pattern. Once you've plotted your support and resistance levels and you've identified what breakout pattern it is, all we need to do is wait for the price to break out of either one of these levels. Here we can clearly see the price break above this resistance level, which would be a good indication for us to enter a buy position. Now, just because there's a breakout doesn't mean we should recklessly enter a position. We need to identify one very important confirmation. Before we enter a buy position, we need to see that the majority of the body of the candle has closed above the resistance level. In this case, we can see that the majority of the body of this candle breaks through this resistance level, making this a great time to enter a buy position on the close of this candle. Now, the same applies when opening a sell position, just the opposite. You need to identify what breakout pattern it is. In this example, we can confirm that this is a wedge breakout pattern. Once you've identified what breakout pattern it is, all we need to wait for is a break of support towards the downside. In this case, we can see that the price breaks below the support level on this candle over here, but we would not enter a sell position because the majority of the body of the candle does not close below the support level. The following candle that forms is a doji candle, which again is not enough confirmation. We need to see a big red bearish candle form, which is exactly what happens next. Here we can see a big red candle form with a large body, which is the exact confirmation we need to confirm the breakout and to open a sell position. And once the candle closes, we can enter a sell position. Okay, so now we're going to move on to method number 2 to avoid false breakouts. Let's just say method number 2 is plan B. If plan A, method number 1 doesn't work out, you want to look to plan B, method number 2. So the first thing we need to do is identify the breakout pattern. And in this case, we can confirm that this is a channel breakout pattern. Once you've identified the breakout pattern, we need to wait for a breakout towards the upside. So here we can see the price does break above this resistance level on the close of this candle over here, but the body of the candle is not very big, so therefore we would not open a buy position over here. In these situations, we need to wait for 3 candles of the same color to form. So what I mean is, because the price broke out of this resistance level and the body of the candle is not very large, we need to wait for 3 candles of the same color to form in a row. In this case, we need to wait for 3 green candles in a row. Just keep in mind it has to be 3 colors in a row. It can't be a green candle, then a red candle, and then a green candle again. It has to be 3 candles of the same color in a row. Once the third candle has formed and we can see that all 3 candles are green, the breakout is confirmed and we can now enter a buy position on the close of the third candle. And again, the same applies when opening a sell position, just the opposite. So the first thing we need to do is identify what breakout pattern this is. And I can confirm that this is a symmetrical/descending triangle breakout pattern. Once the breakout pattern has been confirmed, all we have to wait for is a break of support, which happens right over here. Here we can see the price break below the support level on the close of this candle over here, but the body of the candle is not large enough, so therefore we would not open a sell position over here. Now the following candle that forms is another red candle, this time with a larger body, but we would still not enter a sell position on the close of this candle because the body is still not large enough and has a long lower wick, so therefore we will proceed to wait. And as you can see, the next candle that forms is a long green candle that comes back up to test the support level, completely cancelling out the confirmation and potential trade. Now this makes things interesting. Once the green candle had formed, the next candle to form was a long red bearish candle. In this situation, we can see that the majority of the body of the candle has broken and closed below the support level once again. Because the majority of the body of this candle over here closes below the support level, we could enter a sell position over here. And if there's a slight bit of uncertainty, we could wait for 3 red candles to form, which happens over here, giving us the opportunity to enter a sell position on the close of this third red candle over here. At the end of the day, you can use method 1 or method 2 to avoid false breakouts. Personally, I use a bit of both, and if I don't get either one of these 2 confirmations, I don't open any trades at all. But I hope you guys found this video informative, and I hope you learned something new today. And most importantly, I hope these methods will help you avoid false breakouts when trading in the future. But anyway, I hope you guys enjoyed the video, and if you did, go ahead and smash a like on the video and subscribe to the channel if you are new, and I'll see you in the next one.